Hello everyone, welcome back to yet another video. This week was a pretty volatile week considering we had NFP week and we had Trump rekindling with China over the tariff deals. Those were essentially the main highlights of this week, and this week I managed to come out in the green. The reason why I managed to come out in the green despite all of that happening is simply due to the fact that I know when to sit out and when to participate within the market. That is likely going to be one of your number one issue, maybe not number one, maybe your top three issues whilst you start out in trading. The reason being is because you think trading is an active job, right? You have to trade every single day to make money. But that is not the case. And that is the number one mistake a lot of people get when they get into trading. They think it is an active job and you have to trade every single day to make money. But that is the total opposite. Your job is to manage risk. So by not trading every single day, the days that you don't trade, that is also an active position. And that is what I'm going to cover in this video. So let's get started. Like always, recapping the monthly, right? This was recapped in a previous video, but you had this raid on sell side liquidity, price pushes higher. April has a strong bullish closure with a large bottom wick. May, we had that bullish continuation, fully closing above this imbalance. And also the open of this order block. If you remember from previous video, here, 2 consecutive candles, you use the open. So when price closes above the open of this order block, that would validate the order block, and then you would look to see higher price action, which is why my overall drawn liquidity is this all-time high. And if you look here, this order block is also more significant because we raided this sell side liquidity. Here, accumulation, distribution. Right, but that was covered in the previous video, so make sure you watch that. That I was anticipating for this week to take out the previous week's high, which is what it did. So any trades I was taking this week were simply longs. I wasn't looking for bearish or shorts, simply because trading is a game of probabilities. What is more high probable when you're looking bullish? Longs, right? So there's no reason to look for shorts. The risk to reward ratio is always going to be smaller when it is against your overall direction and target. So here, weekly, that is what we had. Here, took out that market structure break, raided, these trendline liquidity, again, accumulation, distribution higher, and then it's respecting discount arrays. So here you had this order block, and then this was your propulsion block. After the propulsion block, you had a large expansion move, leaving behind a gap. And then from there, price retraced back to this low. So if you look at it from a support and resistance standpoint, this was resistance turned support. And then from there, after that retracement, we had expansion higher again. So if I go back. After this week's closure, we have now successfully closed above that imbalance. So again, another premium array being disrespected, which would mean these relatively equal highs becomes more likely as my overall draw, and it's more likely going to get hit because look how close it is. If you compare this to this low, look how close it is to the high compared to the low. It's very unlikely it's going to go down all the way and take it back out. This is the more probable direction because the closer it is to a draw, the more likely it's going to act like a magnet. So this draw over here is a magnet in price. Now, going down to the daily, this is where your low probability and high probability comes into place. If you look here, where do you think the high probability trades are going to happen in? Not here. Neither is here. But these are your high probability trades. Notice the large expansion it leaves behind in comparison to your retracements. The reason why these are low probability is because price is opposing your overall target, right? If your overall target was, let's say, buy side, anytime price has a large expansion, that is your high probability time to participate within the market. Here, here, and here. Simply because this was your overall draw, right? That was your overall target, and you had a bullish market structure. So whenever it has a bullish expansion, those are the best times to participate in the market because it's very easy to tell where the next daily candle is going to expand to. And again, vice versa if it was bearish. If you had sell side down here, any bearish expansion are times where you should participate within the markets. Because here, if you shorted there during the retracements, you would just lose. So you might be thinking, okay, what if you long? Yes, that is also a strategy, but compare the risk to reward ratio with retracements in comparison to the expansion in the direction of your overall draw. The risk to reward ratio of it is much more higher compared to the retracement offered. So that is why the best time to trade is when price is expanding heavily. And this week was a prime example of that. Right, the reason why I came out green this week is because going into this week, I had already had a bullish bias. Yeah. You had this bullish order block that came into this imbalance. Respected that, displays higher. Took out the open of that bullish order block. So now, like I said, that order block gets validated. Friday came down, retraced, and it's respected it again. Look at how it closed with a strong bullish closure. If you drop down even further, so here, yeah, that was Friday, right? Look at what Friday done. Not only did it come back down, but it also took out these sell side liquidity and then displays heavily higher. So what does that make Friday's low? A strong low. That means in order to continue higher, ideally Friday's low should stay respected, and that is what we had here going into this week. So hence why this week my draw, previous week's high, and Friday's low ideally I did not want to see get taken out because it had respected 1 and 2 discount arrays. Right, remember this bullish order block. So going to this week, I would only be looking for longs. When would I be looking for longs? Where would you guess? During Monday, Tuesday, Wednesday. Because Wednesday hasn't taken out this previous week's high, Thursday I would still be looking for longs. The only time I would stop looking for longs is if we had a very strong bearish reaction off of this rejection block, because this took out that high, or we've taken out the previous week's high. Because after taking out a higher time frame level or a significant level, that is when price becomes low probability. You're unsure of where it is going to head to. But when price hasn't taken it out yet, look at these days. You clear draw, and it's very easy to determine when the next day is going to expand to because your draw is still in place. All price does is respect key levels and move from draw to draw. Or if you want to call it rebalancing old imbalances and moving to external liquidity. This is just an external liquidity. That is all price does. Those are the two functions in price. So hence why, because an external draw on liquidity hasn't been taken out yet, that is where it becomes significantly easy to determine where the next daily candle are going to expand to. And even if you look here previously, this is still low probability to me because your weekly draw is up here. So any bearish price action is simply a retracement. But the problem here with trying to catch the retracement is when is it going to end? Timing the end of a retracement is much more unpredictable compared to timing the end of an expansion. Because here, you have clear draws. The expansion is likely going to end when clear draws get taken out. For example, clear draw, took it out. And that is when the expansion ended. And then you get that little retracement before it continues higher. However, with retracements, there are a multitude of levels that price could come into before it continues higher. If you look here, even if you draw the range, it doesn't even come down to discount. Yeah, this retracement simply came down to this volume imbalance before it displaced higher. So trying to time the end of a retracement is much more harder compared to timing the end of a bullish expansion when you have a bullish overall target. That being said, you also don't want to be one of the first person to long when a retracement looks like it's going to end. Here, going into Friday, it's still, even though it closed bullish in hindsight, it's still low probability to look for longs immediately after this bullish order block until at least Friday has closed. Because if you look at how Friday price action played out, look here, going into New York until the end of New York morning session, it was still heavily bearish. So during New York morning session, it very likely could have still continued lower and taken out this low, accumulated more positions before continuations higher. So hence why, even though you're not shorting the retracement, it's still low probability to be one of the first people to try and long the end of the retracement. Always wait for your daily candle closures and have it show full respect of discount levels, which is what it did here on Friday. So hence why going into this week, I was pretty confident in price continuing higher. If you go to Monday session now, this is how we open up. Friday was essentially a pretty strong reversal. Yeah. 4 hour, took out this sell side, remember? And then we displaced heavily higher. And here you had your weekly open. So Monday, I would like to see some sort of manipulation lower before expansion higher towards the end of the week. Because again, your weekly candle, right? If you was anticipating for bullish expansion, price should manipulate below the weekly opening to create a bottom wick before expansion higher and creating the body of the candle. Right, so that was what I anticipated. But here, we had already had that. Weekly open, price moved lower. But like I said, this is a strong low, so I don't want to see this taken out. Now, playing price up, this was the start of New York session. If I was anticipating for Monday to continue higher, following Friday's bullish closure, and following your weekly draw on liquidity and your overall target, that would mean I would be looking for longs. What reason does price have for longs here? You had this Asia's low, price took out Asia's low. So this became your accumulation. After accumulation, I would anticipate distribution. Now, I wasn't really in a rush because if you look here, even though 8 AM was the start of New York session, before 8 AM, we didn't really have full body closure past this high. Yes, you could probably go down to the 15-minute and look for confirmation, which is what you had here actually. You had this bullish order block. Remember this bullish order block took out that low, so this becomes a high probability low, a strong low essentially. Right, when price closed above that bullish order block, you had another order block, so that becomes your propulsion candle. Ideally, after a propulsion candle, price should continue higher with heavy expansion. I saw this on the 15-minute, but I was more focused on the hourly candle. There's much more higher probability to see a hourly bullish candle closure with a body past your swing high. So that was essentially what I was waiting for. Going into 9 AM, that was where I entered. Servo replay. My entry after we had this 8 AM body closure above that high was at this 15-minute propulsion block. 15-minute propulsion block and stop loss, as you would have guessed, below this strong low. What was I aiming for? You had Friday's high. So I was aiming for Friday's high, and then I rounded it up to 1.5 hour. Right, playing that out. Price came down into it, and then you see how it expands higher. Following the propulsion block, notice how every time a propulsion block gets created, it gives you a large expansion. This was the New York Bell, expanded higher, and took out my target for 1.5 hour. This was also another opportunity to enter in. Right, don't be scared of the 9:30 AM candle reversing, because if your overall direction is correct, this is just another opportunity to enter in. So you could have entered in here, and then you could have targeted either 9:30 AM's high or the next standard deviation. So here, the first standard deviation aligned with Friday's high, but price could also very likely go to the second standard deviation. So you could target the second standard deviation as well. And then if you keep playing it out, that was simply just a retracement before it expanded higher and continued higher. So that sets up the tone for the next couple of days. The reason being is because here, Monday showed a very strong bullish price action. in support of Friday's respect of this bullish order block. So going into the next couple of days, what could you anticipate? It's pretty easy. Bullish expansion towards this drawn liquidity. It's the same thing. If I'm anticipating for the next day to have a bullish expansion, what would I be hunting for? Long setups only. During London, it comes down. This was basically the same setup on Monday, right? We took out Asia's low. Yeah, you're starting to get bullish closures. Full body closure above that. And here. So essentially, if you look at this setup and this setup, it's pretty similar, right? You was anticipating for the daily to expand higher. So any bearish price action should only be seen as a liquidity sweep, which is what you had here. It raided Asia's low before it distributed higher, and again, hourly candle, body closure above the high of the swing high. So that becomes your market structure break. Now, this bearish order block, I essentially wanted to wait for it to come down to that bearish order block and continue higher. But when I dropped down to the 15-minute, it was really close. So what I done was I just entered off of there. Stop loss below there again. And then I was targeting 1.5R again, right? Because 2R would be 4 standard deviation. So it's less likely that it was going to hit 2R. Hence why I targeted 1.5R. So that was where I entered, right? Price retraced, entry. And then that took me out for another 1.5R. So far, Monday, Tuesday, I'm already up 3R. So going into the rest of the week, especially as it's NFP, I could take it slow. There's no rush to do anything. But look at how Tuesday closed. Again, another strong bullish closure. So Wednesday, what would you anticipate? For a bullish day, right? But also you have to be wary because as you approach the middle of the week, you could have some sort of a retracement before it continues higher. Because price very rarely would expand for the whole of the week. So that's just something to note. But if you jump down, 4 hours is a bit more clear, yeah? Smart money reversal, expansion, retracement, expansion. This is simply just a buy program. It's pretty clear. But look here. Notice how little the retracement moves offer you compared to the expansion moves. These are the type of moves that you want to be participating in. So after you had this large expansion, similar to this, you could possibly anticipate a retracement. So that is something just to note in mind. Going to Wednesday now. Wednesday. The reason why I didn't really trade this is because we didn't really have any lows get taken out. Notice how Monday and Tuesday were high probability because we took out these lows in the form of Asia's low. Asia's low getting taken out and then displacement higher. These lows become your strong lows. However, going into Wednesday, what did you have here? During London, it just expanded higher. So that made me really wary, especially considering how much inefficiency we had left behind. So you draw out here. These are all low volume nodes. The price could essentially retrace lower, accumulate more positions at these low volume nodes before distributing it higher. That was what made me wary in price continuing higher. Because in order for price to move higher, it always needs to accumulate positions before distributing higher. So going to New York, price finally took out that low. It was pretty clumsy price action. Usually after taking out that low, I would like to see an hourly body closure above the swing high. But we didn't even get that until New York PM session. And I don't trade New York PM session. So this day, I just leave it out. Very clumsy price action. And that's me not taking a trade for the day. Now, look how it closed. This was how Wednesday closed. Again, it still had a bullish closure. It still had higher lows and higher high. So Thursday, what would I anticipate to expand to? This high, right? This draw is still intact. So playing price out to Thursday, look at what you get. Another low and a displacement higher. So this is the same setup as Monday and Tuesday. The only problem here is this expansion higher happened during London session. So I wasn't on the charts by then. So the start of the New York session, 8 AM, start of the New York session. This was where I entered. Yes, you could argue I should have waited for the open of this 15-minute candle to close. But essentially, I was pretty confident in this low staying intact. Simply because it was the same setup as Monday and Tuesday, right? Price rated the Asia's low, displacement higher. So any retracement here, especially because of how close we are to the overall drawn liquidity being the previous week's high, I was pretty confident in this low. Staying protected, price retrace, and we continue higher. But as you can see, if you played price out, right, I had to our target, that wasn't the case. Also because we had unemployment claims. So if you go back to Forex Factory, we had unemployment claims at 1:30 p.m. So I thought, right, Asia's low being rated, displacement higher, that was enough for unemployment claims to send price higher because we had already had this manipulation lower to accumulate positions. But what I should have figured is that this low being rated was already backed by a strong displacement during London. So when this happens, you could think of it as the steam running out. Price has to come back and accumulate more positions again before sending it higher again because you had already had this displacement during London. So any accumulation at the Asia's low has already exhausted their positions. So that is something for me to personally note in the future. Right, so as you can see here, I got taken out for -1R. That was my thought process during the release of this unemployment claims, right? I was still very fixed on my bullish bias because this was how close we are to the overall draw. And remember, daily had expanded higher. So it's very unlikely for price to just reject at this level. And hence why I was on a 15-minute. After we had this large bottom wick and a closure of this 15-minute candle, that was clear to me that this was just another raid. It wasn't a market reversal yet. Hence why I entered in at the open of the next candle, stop loss below there, right? And I was targeting 2R. And this trade over here, the reason why you had this large expansion move, even though you had no red folder news after unemployment claims, was because Trump was on call with China. And that was what caused the market to go crazy and took out this previous week's high. So that was a pretty quick trade for me, right? Made back -1R and an additional 1R. So for the week, I'm up 4R. And all I've done was look for longs towards this overall draw on liquidity. Now, after we had taken out this overall draw, what did I say? Price becomes low probability. You don't know where it's going to head to, and especially after the next day, we had NFP. That was when I just called it a week, right? So 4R for the week. As you can see on Thursday, it had a strong reversal after taking out this high, and then Friday, expansion higher again. So you can see how unpredictable and ugly price becomes after taking out a higher time frame drawn liquidity. Because if you look at it even on Friday, there was no bottom wick left behind. And it was NFP, so I wasn't even interested in trading this day. Right, I didn't want to give anything back to the markets. I'm up 4R for the week, and all I've done was simply anticipate where the next daily candle is going to expand to and look for my H1 to support that bullish narrative. Rate of this low, distributions higher. Rate of this low, distribution higher. All the way to this overall drawn liquidity. And was the anticipation of the daily expansion hard? No, it was really easy because I was playing the expansion leg. And that is why I mentioned the highest probability trades will always be these expansion legs. Look how many bullish candles it gave you. You're literally just rinse and repeating. Yeah, when this happens, just don't look at the chart at all. Right, even here, you don't have to trade every single day. Because let's say during this period, you make a few losses. When these big moves happen, you're going to be focused on making back the losses that you occurred when you was trading these low probability conditions. So why not just don't trade this at all? And when these moves happen, you're already in profit. If you go on my Twitter, I essentially call this all out at the start of the week, right? With all of the moves live. Hopefully you guys learned something from this, and like always, take care, and I will see you in the next video.